316 rupees for Sudarshan Chemical. Volumes are certainly higher than the 10-day average. So what did the trick for the management for the quarter gone by? And operationally, where is the business headed? Let's discuss all that and much more with Rajesh Rathi, Deputy Managing Director of Sudarshan Chemical. Rajesh, good morning. Thank you for joining us. This is Nikunj Dalmia from the Mumbai studio. Now, if I look at the optical numbers, PAT is up 73%, EBITDA margins have gone up, EBITDA is also up 37%. Let's understand the secret sauce here. Is this largely, your numbers are looking strong, is it largely because of operational efficiency or this is because of other income and tax rate?
So I think it's the improvement in profitability has been a well-planned strategic activity going on in the company for the last 2 years. We've had several strategic initiatives under the balanced scorecard to improve our return on capital employed and EBIT margins. To name a few of the initiatives, one is strategic sourcing, mainly emphasis a lot in China, so becoming an insider in China for sourcing. The second major initiative has been in manufacturing efficiencies and cost reductions. So these two have been really helping us drive, and obviously sales increase in our international markets have been three initiatives. We are still not satisfied with the sales numbers which we've achieved in Q1. So these were probably the prime drivers, and obviously a very tight control on fixed costs. This has been the secret, I think, of Q1 performance.
Rajesh, I think two things stood out. One is that your margin performance improved dramatically, not dramatically, but improved quite a bit in this quarter as well. If I look at the numbers, 17% versus 14%, I mean 300 bips in a quarter is no mean feat. Do you see this momentum continuing? And is there a possibility that your annual margin numbers could actually look much better than what you've done in quarter one?
So I think just to talk about the rest of the year, what we expect and what we didn't do well in Q1 probably, we would be introducing several new products in the market. Our aim in the next 1 or 2 years is that 15 to 20% of our sales should be coming from new products. The second, as I mentioned, our emphasis on sales. We're already a dominant player in India and the Middle East market, but we want to majorly increase our market share in international markets, and that's where 90% or more of the market is. That's going to create a lot of excitement in the company, and I think more importantly, I think every employee in Sudarshan desires to make this company a global company, a world-class company, and reach the 4th position. That's what our vision is. So we should expect to maintain our performance of this year, of the first quarter.
Okay, so when you're saying that you're looking to make this company more a global company, that's the kind of perception you want to build in the market. Now you have a dominant 35% domestic market share, and are seeing the tilt towards high margin pigment products with sharpening focus in Europe and North America. What kind of market share do you hope to target in those regions, both North America as well as Europe?
In the next 2 to 3 years, we look at having at least 10% market share in those continents. Not just those continents, but South America and Asia are also very important markets for us. Asia is growing tremendously, and I think we should be doing very well there too.
1,000 crore proposed capex. How much you've already invested and how much do you plan to invest in this year?
The board has sanctioned about 170 crores of investment for this year. And one thing we've learned very well now is to implement capital investments within 3 to 4 months. So what we do is, in order to help our return on capital employed, we wait for our capacity utilizations to reach about 90%, and that's when we make the investments. So that's been our area. We are making investments also to improve our manufacturing efficiencies, lowering our costs. So that should all go streamlined. That will go all well this year.
You have a large land bank, and my understanding is that the land bank is valued anywhere between 250 to 300 crore. Will that land bank be used for capex, or are you looking at monetizing it?
So right now the landmark is the board is looking at this actively. Currently, currently we've not planned this, but I think our growth plans are irrespective of these, and the capex which we want to invest is irrespective of these land banks.
So are you looking at monetizing it? Rajesh, is what I'm trying to understand.
What I'm saying is, board is very actively looking at. There are several issues concerned with this, the land matters, and the board is very actively set up a committee, and they're actively looking at how we should be, how we should be dealing with the land bank.
Because just taking Nikun's argument forward, you are sitting on a valuable asset. You are looking at expansion of your business. Clearly, there is a capital requirement. Now, either you raise money through an equity offering, or you look inwards and try and monetize the land bank that's sitting on your books. Could you highlight where the thought process is tilting in that regard?
So there are several legal issues and compliance issues. So that's where the board is dealing with it. And as soon as we are not the timelines. So the board is looking at the timelines when this would happen. So we still don't have a clear-cut guideline when all the legal issues would get resolved.
Okay. And post the issues getting settled, you still don't know whether you will monetize it or you will use it for capex, right?
Plans, we don't want to bank on that. So our plans are irrespective of that.
Okay. Now let's talk about it when the issues do get resolved. Let's talk about your capacity expansion as well. You doing that 160 odd crores this year is a separate thing, but a lot of people are saying that the Roha capacity augmentation would be a big kicker. Now, when does the full benefit of that come on stream? Does it take another 2 years, or does it happen by FY18? And what would that do to your turnover? Will you be operating at full capacity utilization on that new capacity because of the existing pent-up demand? Can you give us some color there?
So what we're looking at is acquiring the fourth position, and the fourth position in the next 3 years, in the next 2 to 3 years, we want to, everything's going to be organic growth, and we look at major investments in our Roha plant, and we have a lot of free land there. We have the necessary government permissions. So we are systematically kind of, like I said, what we've really learned through this is invest just in time so that we kind of benefit this. So we reach a capacity utilization of 90%, we make the next bit of investment. That's been our strategy.
So, when a company goes on capex, the return ratios, they tend to get punctured. Once the capex is over, the return ratios, they tend to move higher. My understanding of your business is that you are in specialty chemical where the margins would be higher and you have a reasonable amount of market share and new product advantage. So where do you think your return ratios, and especially return on capital and return on equity, will stabilize in FY17 and FY18?
So as you must have seen in the Q1, we've already had a major improvement in our return on capital employed, and this trend should continue. Like I mentioned, we have two major objectives in whatever we drive in the company: improve ROC and improve EBIT margins. So we see this trend to be sustainable.
Now, my understanding of Sudarshan Chemical is, when I look at your comments on press, on our channel, on other media platforms, you have aspirations to become the 4th largest chemical company in the world, right? Correct me if I'm wrong.
We want to become the 4th largest pigment company in the world.
Okay, the 4th largest pigment company in the world has a turnover of about 3,900 crore. So how soon will you reach there?
The fourth largest pigment company does not have a turnover of 3,000. Our estimate roughly is that the fourth player, though this is all secondary research, would be about 220 to 240 million dollars.
Okay, then my numbers are wrong. Okay, so when will you become the fourth largest company? Let me rephrase my question and ask it again.
Well, if the company would desire to become a fourth largest position even in this year, but I think in the next 2 years we should definitely reach the fourth position.
We wish you all the best, Rajesh. Thanks very much for a very candid
so
chat,
much.
explaining to us your business plans as well as expansion plans that you have overseas. We wish you all the best once again for the future.
Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.